What's going on, Check? It's day two of gaining financial freedom, reading Investing 101 to create better spending habits, become financially responsible, and gain financial freedom to prepare me for years to come. Got my timer. Let's go ahead and start. All right. Other indexes treat each stock equally. The Value Line Index tracks 1,700 equally weighed stocks from the New York Stock Exchange. The National Association of Securities Dealers Automated Quotations, or the NASDAQ, and OTC markets, it acts as a market barometer, an instrument measuring atom, atom, atmospheric pressure, usually pressure, especially used in forecasting the weather to determine altitude. Okay, so it's to gauge the health of the economic market trends, gauge the overall market health, sentiment, or economic trends, helping investors forecast future performance with popular examples using the January barometer, the January S&P, or the simple this what is it? The It was something Standard and Poor 500, and okay, basically just it tracks the health. How to say it? The barometer. All right. It acts as a market barometer, widely held to be the best measure of the overall market and crucial monitoring tool for any investor. The SEC. If you become seriously involved with investing, the one organization you're sure to hear about is the Securities and Exchange Commission, SEC. The SEC is the part of the government regulatory regulatory apparatus that keeps an eye on the stock market. During the Great Depression, Congress passed the Securities Exchange Act of 1934, creating the U.S. Securities and Exchange Commission. The 1934 Act was designed to restore confidence in capital markets, setting clear rules and giving the SEC power to regulate the securities industry. Basically, the SEC watches over the basically the SEC watches over the securities industry to make sure there are no illegal activity takes place. To help securities industry to make sure no legal activity takes place to help with that enormous task, the agency sets strict standards for brokers, investors, and publicly traded corporations. Every corporation whose stock trades on a U.S. exchange must be registered with the SEC. The agency's main goal is to protect investors by making sure the securities market remain honest and fair. One way the SEC meets this goal is by making sure publicly traded companies disclose enough accurate information for investors to make informed decisions. There is a slew of ongoing paperwork required for all companies whose stock trade on the public markets, including annual audited financial statements. In addition to keeping close tabs on publicly traded companies, the SEC regulates any companies involved with trading and any professionals who offer investment advice. Insider trading is one of the widely known issues covered by the SEC. Insider trading or insider information refers to buying and selling selling publicly traded securities based on confidential information that has not been released to the general public. Because such information is not available to everyone, those insiders have an unfair advantage, and though it makes for splashy headlines, think Martha Stewart, Enron, and WorldCom. A good story does nothing to help investors recoup their losses. The SEC, the SEC Division of Enforcement. The SEC Division of Enforcement does just what the name suggests. It makes sure federal security laws are followed to the letter. The division investigates possible legal violations, and when it finds that laws haven't been followed, it recommends ways to remedy the situation. Most important, though SEC is all about you, ooh, babe, ooh, babe, you're protecting you from swindles, providing reliable information, and keeping your broker in line. On its website, you can visit a special section called the EDGAR, Electronic Data Gathering, Analysis, and Retrieval, a complete database of all corporate reports such as 10Ks and 10Qs, 10-Ks, 10-Qs, filed by public companies all the way back to 1994. It is very easy to search Edgar for information on any company you plan on investing, so make sure this is your first stop. All right, babe. Go SEC website, Edgar. Edgar. On his website, www.sec.gov, the SEC offers anyone the opportunity to investigate any questionable activities. They also make it available a wide range of public services, including free investment information, up-to-date complaint tracking, and toll-free information at 1-800-SEC 0330. Global economics. The market on a grand scale. During the past 20 or 30 years, one of the most important things that happened has been the information revolution. The speed at which information now circles the world has meant that international boundaries are have virtually been erased. As Thomas Friedman wrote in his well-known book, The World is Flat, all this affects investments and the investment climate in which you operate. Investments don't exist in a vacuum. What happens in the U.S. stock market has global consequences. Changes in the interest rates on the U.S. Treasury securities can impact bond markets across the ocean. A downturn in the U.S. economy hits the rest of the world almost immediately. And the reserve is also true. The reverse is also true. Major shakeups around the world affect stock prices, bond prices, commodities, and currencies. Global profits. At the same time, the, the breadth the breadth of the world markets particularly ensures that there are always a profit to be made somewhere. Where major economies are tanking, emerging economies may begin to thrive. A natural disaster is one part of the world that can cause the economies in other parts of the world to go into overdrive, or it can cause shortages and slowdowns depending on the type and extent of the damage. In addition, the internet has made the world a much smaller place. We now know instantly when something happens in the farthest corners of the earth. We know the second a stock exchange in Asia or Europe goes up or down in a few points. Extensive international trade means the dollar can be affected when another country's currency strengthens or weakens. All of this, all of this affects investors. Whether you invest in individual stocks or fixed income securities, mutual funds, real estate, or more exotic financial instruments, your investments will feel the impact of world events, sometimes immediately, other times slowly. It used to be that only investors in foreign securities had to pay close attention to foreign and global economies. Now every investor needs to know and understand what's going on around the world because every investor is impacted by what goes on in the rest of the world. Foreign owned or American owned. Um, One of the questions to investigate when buying a stock in a company is the company owned. One of the questions to investigate when buying a stock in a company is the company owned by the United States or abroad? There is nothing wrong with investing in a foreign owned company, but generally that can increase the level of risk onto your investment, depending on who owns the company and where they're located. Company fundamentals. Looking at the ABCs. When you buy stock in a company, you are buying a part of that company, just as you would do if you were making any other purchases. You have to know what you're buying and why. This means doing research. Many people don't like this aspect of investing. It sounds too much like work, but it's an essential and rewarding aspect of building your investment portfolio. Most educators will tell you that 75% of all learning is gained by doing homework. This is true of investing as well. When you are interested in investing, it is important that you do your homework, including research, analysis, and investigation. Look up the stock you own on the internet and find any company listings. Read the company newsletter, its annual or semi-annual reports, and ask your broker for any updated news about the company. An educated investor is more likely to be patient and An educated investor is more likely to be a patient and relaxed investor. Know what you're buying, buy what you know. One of the benefits of being a consumer is that you are called on to evaluate products and services every day. You have learned that you can get the best results by thoroughly researching your options before you make a purchasing decision. Maybe you recently purchased some new electronics that you just can't put down. Switch cereal brands to cut some of the sugar out of your kid's diet, or start new medication that actually made you feel better without any side effects. These are experiences that you can put to work when you're making your investment decisions. Your observations are another way to gain valuable insight. During your recent trip to Japan, did you notice people consuming huge quantities of new Coca-Cola product while waiting to pay for dinner at your favorite restaurant? Did you notice many of the patrons, patrons pulled out an American Express cards, pulled out American Express cards? Part of doing your homework as an investor is noticing the companies whose products and services are prominently displayed and used by people around you. Avoid hot tips. Putting serious thought into your investments early will most likely pay off in the long run. Unfortunately, many people are introduced to the world of investing through a hot stock tip from their barber, buddy, or bellman. That is really no way to make an easy buck. And by jumping onto a stock because of a random tip, you'll probably end up losing money. Facts. What the fuck? Cub. What the fuck, cub? Whichever style of investing you choose, you need to a place to get the information on which you can base your decision. These days, there is no better starting point than the internet. On the web, you can easily find the best investment information in real time, mostly for free. More and more investors, both young and old, are turning to websites to limit their reliance on expensive financial advisors. In addition to the prospect company's web page, there are dozens of sites that can provide in-depth company data and even more that offer real-time stock quotes. There is no shortage of good market research available to you as an investor. Part of your job is to determine which sources work best for your needs. Read the annual report. When it comes to reading financial documents, most people would rather walk over hot coals than pursue endless rows of numbers. Corporations count on that and fill their annual reports with glossy color photos and color commentary. A lot of people assume that heavy, glossy reports mean a successful year. The numbers inside, though, may tell a completely different story. It is up to you to get comfortable with the numbers. When you do, you'll find a wealth of information about the company's current success. Make an investment checklist. Every investor should use research checklists to evaluate stock under consideration. Look for annual reports, financial statements, industry comparisons, and current news items. That's important. Every investor should use a research checklist to evaluate stock under consideration. Look for annual reports, financial statements, industry comparisons, and current news items. Analyze your findings before making an investment decisions. Once you become a shareholder, you will find that your main information needs are filled with press releases, ongoing financial statements, and ju- ju- judicious stock price monitoring. All right, all right. If you're already a shareholder, you'll automatically get a copy of the annual report every year. If you are not if you are not yet invested in the company, you can simply call and ask for one or look at it online. Every company's report looks different. They may have assembled it. They have made it, and they may assemble. Every company's report looks different, and they may be assembled in different orders. However, every publicly traded company's annual report contains the same basic items. Letter from the chairman of the board. Expect a big pile of spin here. Letter from the chairman of the board. Expect a big pile of spin here. A description of the company's products and services. More spin. Financial statements. Read the footnotes carefully. They contain some of the meat. Okay. Management discussion. Sort of a big picture look at the company with a little spin. CPA opinion letter. Read this to make sure the company's financial position is accurately represented. Company information, locations, officer names, and contact information. Historical stock data, including the dividend history and dividend and reinvestment plan program information. Two proven ways to analyze stocks. Investors generally favor one of two stock picking techniques: technical analysis or fundamental analysis. Technical analysis is all about stock prices and how they move, and it relies on the charts and graphs to determine patterns. Fundamental analysis, more common among beginning investors, involves studying the company itself with a focus on financial investments and performance. For optimum results, many savvy investors combine both techniques when making trade decisions. For example, a stock with great fundamentals and sagging price trends could indicate troubles on the horizon. Okay, great fundamentals, and sagging price trends indicates trouble on the horizon. Okay, technical analysis focuses on the charts, graphs showing past stock prices and volume patterns. There are a number of patterns technical analysis to recognize to be historically reoccurring. The trick is to identify the pattern before it is completed. Then buy or sell according to where the pattern indicates the stock is headed. Those who use this technique believe you can forecast future stock prices by studying past price trends. They make trades based primarily on stock price movements. Technical analysis to do what? Technical analysis tend to do much more buying and selling than fundamental analysis. Fundamental analysis is a long used common way to review stocks. The technique involves an analysis of the company's ability to generate earnings and an examination of the value of the company's total assets. Value investing and growth investing are two subdivisions of fundamental analysis. Proponents proponents of fundamental analysis believe that stock prices will rise as a result of growth. Earnings, dividends, and book values are all examined, and a buy and hold approach is usually followed. Okay. Proponents of fundamental analysis believe that stock prices will rise as a result of growth, earnings, dividends, and book values are examined, and buy and hold approach is usually followed. Okay. Fundamental analysis advocates maintain that stock and well-run, high-quality companies will become more valuable over time. Okay. Stop right there. Um, okay. I'm reading this book to become financially free, gain financial responsibility, to create better saving and spending habits, and to prepare me for the years to come.